Kitchens are certainly in at the moment, and I know they do add a lot of value. The only discussion that I would think needs to be added to that is if you're about to sell your home, be careful about putting any major capital item in, like a bathroom or a kitchen, because at the point of sale, normally stick to paint, gardens and maybe some carpets, and clean the windows, a few simple things like that. So get good advice at the time that you're about to sell your property. Now in the studio today, talking about all sorts of real estate issues, a guy that's been a mate of mine for many, many years, Kel Spencer. He's the Director of Propell National Valuers. Welcome, Kel.
Thank you, Anthony.
Now, Kel, the reason I'm keen to get you in and have a chat to you is valuers can make my life really easy or hard as a real estate agent.
Right.
And I know when I was in the States, it's the valuers that used to start being very conservative and made it hard for people to get finance. But before we get to that, just some background. Propell National Valuers, what's the background of them?
Yes, we formed a national company back in 2007, and we now cover most postcodes in Australia, so right across the country. And we run, I think, something like about 110 valuers working for the major banks. And they have changed their tune a bit in the wake of the GFC. They do now require us to have more diligence, more credit check, more governance over our business, and they like to have a look at that. So much so that 4 major companies now in Australia doing the valuation work for the banks, and we're lucky enough to be one of them.
Okay.
So yeah, it's all good.
So Kel, just explain to me, we sell a home to a client, might be listening, or an investor. They then go and, well, sometimes they get their finance arranged beforehand, subject to your valuations, right, or a valuation. So when you go out to look at a property, do you just sort of drive past and get a blurred shot, or do you just put your foot on the brake with the car and get a photo, or do you go and look inside the house, or what's the deal?
I wish. That sounds very simplistic, but no, we need to inspect the property thoroughly and measure it up and full size of the property, do a little plan. And then we look at the sales that have occurred in the immediate location over a 3-month period, and we compare those sales to the subject property that we're valuing, and we make adjustments for the size of the land, the size of the building, general condition, etc., and we supply the bank a figure.
Now, so would you typically know the other properties that are comparables, or do you drive up and look at them and check your files for what condition they're in, or how do you get that comparison going if you haven't seen the other properties? Yeah,
well, we do look at them, but usually just from the curbside. A lot of information, of course, off the net, because those sales have been usually internet-based. The valuers are tending to operate within certain precincts, so they're sort of in and out of those streets almost on a daily basis, so they get to know what's happening very precisely. And they also drop into the agents, and they attend the auctions as well from time to time, just to stay close to the marketplace.
Now, Kel, back when the GFC hit, prior to that it was really easy to get a loan, and it was almost never that it would be knocked back. In fact, not just on income of the person that's applying, but on the valuation itself. Since the GFC, something dramatic's changed. You alluded to it. Can you tell me what your instructions have been? Have they been, go very conservative guys, or what? How does it work?
It works in our business that all valuations are sent electronically to a governance section of the business, where they check the valuations for relevance to sales, etc., and they're very experienced people that will pick up any human error. The banks themselves have obviously taken a bruising because their defaults have grown, and they're pretty keen to not duplicate that, so they are lending less against the value of a property than perhaps they were prior to the GFC, and they've tightened up their lending policies. We used to have lots of low doc loans and 90%ers and all this type of thing. Well, they seem to be something of the past.
Back in the good old days.
Good old days, and if we move across to commercial, we'll leave the equity now required for commercial borrowing is probably at 35 or 40% of the price before they'll fund.
Yep.
And mezzanine funding and second mortgages are pretty hard to come by now.
Now, what's mezzanine funding?
Well, it's essentially bridging the gap between the first mortgagee and the purchase price. And then, of course, you have your straight second mortgages, which is usually private funds or lawyer-driven funds or investor-driven funds. All of that finance is becoming a bit harder to come by, but certainly the major banks, our 4 major Australian banks, they're more conservative, certainly.
And Curl, very recently as this week, they've dropped their fixed rate to 4.99%. Commonwealth Bank announced that, I think, this week for 2 years. There seems to be some competition now between the banks. Have you noticed any difference at your end?
It comes and goes, Anthony. You know, 1 minute the ANZ will be chasing hard and then they will back off, and CBA will decide they've got a big pool of funds from overseas and they want to get that into the housing market, so they will be more aggressive with their lending. The topic of interest rates is a beauty. I mean, the ANZ are still predicting rates to come down further. Some of the economists are saying probably just one rate reduction left. But I guess we just need to see, it's just all uncharted territory, we just need to see where this economy goes. It's just, I guess, unfortunate that we have such a long lead to election. I mean, I've just never experienced it, none of us have, where you get this uncertainty running for so long, and it really doesn't help real estate markets.
Curl, typically before an election, and when they announced it, 2 weeks ago, I'm going, you idiots, how can you do this to us? The whole economy takes a hit. But I'm not sure this time, because I think everyone's so excited about getting this government out of government that from our point of view, this last weekend, we were getting reports of over 100 people through open inspections, and we have not seen those numbers for, I can't remember when. It was like back in 4 years ago.
Yeah, well, that's an interesting proposition, that people are really made up their mind and the expectations are already out there. Interesting to see the National Australia Bank this morning came out and said business confidence has markedly improved just in the last few weeks. So again, that's a good sign, and certainly the inquiry for property has picked up markedly. So that is a good indicator.
Kel, we'll be back for some more questions in a few moments.
Thank you.
Now let's go to Going, Gone.